we are looking at a daily chart of the gold. You can see the little lit up window on the top that says GCM 9D. That's the daily chart. Now, since the gold is rallying, what I want to do is see where we might look for resistance to the current rally and possible sell areas. Okay, maybe we just blow through all the resistance and continue higher off of this larger pattern in the gold, and that would target, because I know there's still some big bulls out there, that would target 1049. Okay, but we want to run all possible levels and be prepared in advance. So here, I'm going to mark off the highs and lows that I think are important as far as this analysis. And then what we want to do is, look for the possible resistance on the way up. Now, I've already run the retracement of the high to low. Let's see, 865, 865. Yeah, here's the lowest low. So I want to make sure I did that correctly. High to the low. Yeah. Okay. And then there's another retracement I can run of the lower high of March 20th to the lowest low at 865. So let's run this high to this low with the two-pointed tool. Okay, I erased the levels that we went through. And let's see, I see a very obvious extension that I can run that would come in close to current levels. I just marked off that high to low. So let's take the two-pointed tool and run the high to the low. We've gone through the 1272, so I'm going to get rid of that, but there's the 1618 above that at the 924.60 area. Now, what else I'd like to run is, now that I've pretty much done any of the retracements and extensions, how about any projections? Now, there are kind of some swings within swings, and this is where you have to, look at this as, it's not a science. Some of it is artwork. Okay? There are swings within swings that not everybody would identify the same as I would. But I would take a prior low to high here. Whoops. I'm going to use the projection tool. Taking the March 18th low to the March 20th high and projecting 100% from that low made on April 6th. Okay, that projection comes in way above at the 950 area. It's interesting that it comes close to a 618 of the large major swing. And there are a couple of other swings in the same direction that I would run. Here is a prior low to high swing, and that maybe not everybody would see that you should compare those swings. And if you don't use it, that's okay too. But this is what I used. This low to this high. There's going to be a difference of opinions here and there as far as, what's valid and what's not. I mean, bottom line, if you use extra levels or more levels than I used, you're not going to use it for a trade unless it triggers anyway. So how about this larger swing also? I'd like to run this low to high and project it from that low. Okay. Let me see if it makes sense to run an extension of this high to low. Yeah. Okay, now this is where you might have difficulty in, finding some of the swings because it's a little bit difficult to see. What I did was I ran this lower high to the low and ran the extension. Okay, I just wanted to see if that would overlap, and it actually overlapped beautifully up at this 618 retracement area of the whole swing. So right now, the immediate decisions in the gold, or like the next place where we would look for a possible setup, is this 917 to 920 60 area. Okay, there's a 50% retracement, there's a 382 retracement, and I believe there's a 786. Okay, so there are three price relationships that are coming together. You also want to remain, let's say for example, if you're long a gold position, and let's say if it takes out this cluster, you still want to be aware of the next decision as far as an extension also, the 924 area. So it's not necessarily clustering very well with this area, but use it because many moves tend to terminate at extensions of the prior swings. So it's just something else that's telling you to tighten up your stops if you're long. Then we have this next stand out. Well, symmetry I like to look at all around. So there is an important symmetry projection at 939 that overlaps at 50% retracement. But the big zone, or the largest zone that stands out to me right here, is anywhere from the 947.5 to 955 area, and you can break that down into two smaller zones. But if we get up into that area on the daily chart, you want to go down to your lower time frame charts and see if there are any reversal indications. Okay, so this is the gold. And you take it one decision at a time. Okay, so here. All right, I have quite a few charts that I need to post on Twitter for you later. All right, let me start taking some questions because there are just too many, and I want to get through it. There's one question that says, "Can you clarify? Are there only two tools?" The only two tools that I really use are the the retracement tool and the projection tool. The retracement tool runs the retracements and the extensions using 2 points. The projection tool runs the symmetry projections and, a couple of other, or another price relationship that I'll use sometimes using 3 points. And a lot of the questions that were asked before kind of have disappeared, so you may have to, we may have to go back. Yeah, the next example I'll do on the daily S&P. But I want to answer any of the other questions, and I cannot see some of them. Well, if this is, okay, in the gold, I mean, that looks like a double bottom to me because we had those lows at similar levels, and then you took out the middle high, because the double bottom is not confirmed until you take out the middle high. Okay, in the beginning of the presentation, I had the 1272 square root of 1618. The question was, how do you arrive at a 1272 extension? So it's a square root of 1618. Okay, the question, Barry, do I still look for short setups in what? In the gold chart that I'm showing, or something else? Yeah, if we get up to 917 to 920 area, and my 15-minute chart shifts to a pattern of lower lows and lower highs, I will then set up a short sale on the 15-minute chart. Other people might use, or there are other traders in the room that, if they might just use a TTM trigger. If you get up into that resistance and the market stalls, and they get a squeeze trigger, you can take that. But typically, I'm setting up markets on both sides. Sometimes in the morning we'll be long the S&P. Sometimes we'll be, then short later in the afternoon. I do have a step-by-step setup in the book, where I go over, setting up a trade, then going down to, a trigger chart, an entry, placing the initial stop, that type of thing. All right, I guess I'm going to have to scroll up for questions. Okay, Greg, I can't answer that USD JPY question because I'm not doing that chart. I mean, I just did the futures. You can use this on all markets that have good data. That was the question, can you use this on all markets and all time frames? As long as you have decent data in the market and on the time frame, you can do this analysis. You need, standout swing highs and lows to run it. So you can't really try and do this analysis on something like a penny stock that doesn't have meaningful highs and lows. The zigzag, that's a big question. I'm going to try and find, I'm going to go and find an example of one from my prior, let's see. I'm going to go grab one of my old presentations. Okay. All right, this is an example of a two-step. Okay, what you're doing is you're looking for a zigzag pattern that starts to develop in the market. But the problem with this is you don't know whether it's the beginning of a new uptrend in this case because it's taking out a prior swing high within this zigzag pattern, or if it's just a two-step pattern and the market's going to roll over from the two-step pattern parameters. I don't know what the answer is to the question anytime that I see a two-step pattern. What you have to look at is see if the market respects the two-step pattern parameters and triggers a trade entry for you. So in this case, I did a very extensive chapter on the two-step pattern that will really get you to understand what I'm talking about here. But you're looking for the zigzag pattern that is a correction of a prior swing, and you're going to run the retracements of the high to the low in this case. Okay, and there was a 786 retracement that came in at the 1268 area. This is an example in the NASDAQ on a 15-minute chart. And then you would also run the price extension of the high to the low of the zigzag pattern and see if that overlaps one of the retracements. So of the high to the low, extended upwards 1272 came in at 1265. So 1272 is overlapping the 786 of this larger swing. And then the other price relationship I use is, the first swing up of the zigzag. You want to project 100% and see if that also overlaps some of these other price relationships. So the 100% projection of this first swing up of the zigzag pattern comes in at 1262. So here's the zone of the two-step pattern at 1262 to 1268. If this is a two-step going to play out as a two-step pattern, then the resistance should hold and the market should roll over. If this is the beginning of a new uptrend instead, you should blow through this resistance. So here's the 1262-68 area. Okay, and here's the continuation of that. It made the high right around 1265, directly within the two-step pattern zone. And the two-step played out. The target on the two-step is always 1272 of the full zigzag. So the lowest low of the zigzag to the high extended. Okay, so you had two-step pattern and then a 32.5 point decline in the NASDAQ off of a 15-minute chart setup. As far as moving averages, I do not, or I use the 34 EMA. That's really the only one that I use. But you could use moving averages as a trigger if you wanted to, moving average crossover. I mean, I don't do it, except for the 34 EMA on my chart. The question is, in my room, are we mostly looking for day trades or swing setups? During the trading day, we're mostly focused on the intraday stuff, the day trading. But when I do my end-of-day video, and also I do show some of the daily charts during the session, those are where you can set up the swing trades, like the setup that I gave you, posted on Twitter on the British pound, or I've had other ones, bonds, and you can go back. All the charts are still up there, so you can see there were ones that that worked perfectly, and there were other ones that the market just blew right through. But hopefully, the ones where the market just blew right through them, you never saw a trigger. But let's say if you did get a false trigger, you know what your risk was, and you would have been stopped out with, relatively, shouldn't have been hurt too badly. I mean, let's say, if we stop in the gold market up at the 918 area, okay, and let's say you get a sell trigger at 917 after it stalls up at 918. Well, your risk can either be defined above the cluster, so you can put in a stop at 921, or you can put in a stop above the high that was made prior to your reversal signal. So if you got your reversal signal when it hit 917, and the high at that point was 918, you could put your stop in at 918.20. It just depends on how tight you want to play it. Okay, question is that a 34 EMA on the 15-minute chart or daily? I use the 34 EMA on every chart. Another question is, have I incorporated pivots on any of the studies? No, not because I don't think that they have value, but because I don't have the time to do the other work. I think that if somebody else in the chat room has that information and wants to throw it out there, and it just happens to match up with a cluster, great. But I don't have time to do anything more than I'm already doing. Let me see. Okay, question was, what are the time frames that I use intraday? As far as the time frames for doing analysis, you're typically going to see a 15-minute chart in the NASDAQ, a 15-minute chart in the S&P, along with a 3-minute chart in the S&P to fine-tune. But that's the only really micro chart that I use in the chat room is the 3-minute to help you walk through, some of the entries and fine tune. You should see a 15 or a 30-minute chart in the gold, and a 15 or a 30-minute chart in the euro, and a 15-minute chart in the bond. Then I also run, some of the end-of-day updates. I'll typically do most of the daily charts in whatever markets are really setting up the best. So, if gold is hitting a zone or time and price, I'll focus on that. The euro, if the yen is setting up one day better than some other markets, then I'll show a daily chart of the yen, and give you parameters and a heads up for, a possible change in trend. I don't use 236 for a projection. That was the question, but I do use 236 sometimes for retracement, but only if it's a really, really wide zone. Yeah, Denise does things a little bit differently, but what happens is that I have, some pretty high probability setups as far as, the daily work and some of the 15-minute setups, and she has a certain way of working with them. So the blog, or I'm going to show you an example of a trigger, of a trade and a trigger, she doesn't do it that way. But she gets, she's very specific in the way that she does it, and she has a high percentage of winners, and when she matches it up with my stuff, it makes it even better. Okay, let's see. We've got, I'm going to see what other questions I could find in here that I didn't see. One question was why the 34 EMA. I mean, it is a Fibonacci number, but I just got that from another group that was using it, and I noticed that it seemed to match up very well with some symmetry projections. I used it on my charts. I liked it. I kept it. But it's not something that, that I found. It was something that I borrowed or learned from somebody else. Let's see what else. Okay, there's a question, why do I use the 786 retracement yet not the 236? Again, the 786, I find you will see it quite a bit, especially in the S&P market. But the 236, I'm not going to use unless it's a really, really wide, wide swing. It's just overkill. I have enough information with what I'm already doing. Okay, I'm having a hard time, scrolling up. So what I'm going to do, what I did say I was going to do was a chart in the S&P. I'm going to do the daily chart and go over that. Let's see, let's get the daily. And then just, if your question wasn't answered, you might just want to ask it again, but I need this live chat thing to slow down so I can get to it. Actually, I'm going to do S&P cash because there's not enough data here. Okay. A lot of times I will not use the actual contract for some of this longer work because you just don't have good data and it's kind of sloppy. But here you can see quite a bit with the cash S&P. So one of the things that I'll do here is I'm going to show you where we're at in the bigger picture. I'm going to start with the symmetry projections. You see I measured a low to a high and projected from the low that was made March 6th. I'll project another low to high. I believe we went through this one though, but let me check. Yeah, we went through that 850 projection, so let's get rid of it. And let's see, I'm going to run another low to a high. Okay, we went slightly through that one, but not by too much. Okay, and then let's run all the retracements and then the extensions and see what it shows. So I want to take the, let's see, in this case, okay, 236 is selected. I'm going to take this high to this low. Okay, there's a 236 up at the 881 area. I want to take some of these the largest swings here, the lower high to the ultimate low. Okay, there's another overlap. Let's see, lower high to the low. Another lower high to a low. And then the prior high to low, and a smaller swing within that. Okay, now I'm going to get rid of a lot of the lines that are above the market because they're not really relevant at this point. We just want to know what we're up against now. And this is a very important area where we had some symmetry with some of these prior rally swings. You know, using that, the bigger picture data. We had a 618 that overlapped. I believe it was of this high to this low. So here's the zone that we were up against recently, and we also had hit timing. We had timing between the 13th and the 17th of April. So the high was made on the 17th. That high is considered key and pivotal, but at this point it looks like we're probably going to go through it. There's still a very small percentage, that we still could fail underneath the pivotal high that was made on the 17th at time and price parameters. Okay? But I'll show you what I got on the flip side as far as support. When we started coming off of this area, you wanted to look at what might stop the decline. And there was, let's see, one projection here, another projection here. Let's see, these smaller swings, we would have gone through it. How about this projection here? Yep, we went through that one. I would run, again, for support, we're running lows to highs. Okay, there was a 236 there. You can run the smaller swings, low to the high, overlaps of 50%. And then this low to high extended. You can see that we did initially come off of that April 17th time and price high, but when we started looking for a possible failure on the way back up, we have not seen it yet. One of the questions is, do I run them on the retracements on weekly charts? If there's a market I'm really interested in, typically I do run the weekly charts. Okay, here you can see that we bounced off of the April 17th time and price resistance. You don't see the timing here, but I do have that posted somewhere on Twitter. And then as we came off, we just ended up hitting a support zone that the market could not get below, and the rally has resumed. Now, if we're going to follow this general pattern of higher highs and higher lows on the S&P, it targets what? And also just an interesting fact from a book called Geometry of Markets is 1272 is the base to the height of the Pyramid of Giza. Now what that has to do with anything, depends on whether you want to look into sacred geometry and all that kind of good stuff. But it's pretty interesting that was the dimensions. The timing is not on this chart. You can go to Twitter and you can go and download the timing chart that I posted there. Okay, so currently, the daily chart, you're still looking at a pattern of higher highs and higher lows, and unless we fail underneath the April 17th high, we're probably going to look for 888.90 as the next target on the upside. And then if we do make a new high on the daily chart, then I'll start setting up the pullbacks on the buy side on the daily chart. The shorter term charts, I'll be setting up back and forth all day long. It just depends on what that particular chart shows me. We've had some choppy days in the S&P for sure. But if we can break this larger bearish pattern by really getting through this area here, and actually I think the most important high is, or the next most important high beyond this April 17th high is the January 6th high. If we can take that out, then the potential is for a lot higher prices. If the market was going to fail, this was the time window and the price area that I was watching for a failure. And if we clear it instead, then you have to go with it. Don't get married to an opinion. You have to take it one trade setup at a time. Okay, question is if I've ever used market profiles. No. Again, it's not a lack of interest, it's a lack of time. I've got too much else going on as far as doing 25
economic news.
25 different
now, before we get started here, I am moving into my new
markets.
office, so there will be a couple little setup issues for the next 2-3 days.
We're looking at a Dow chart weekly, okay, and what you'll notice about this weekly chart is that the larger pattern is still a bearish pattern of lower lows and lower highs, right? And that pretty much remains the case unless that early January high is taken out. So where are we at now? Okay, here, what I'm going to do is take these prior rally swings. You had a 1680 point rally into the October of 07 high and projected that from the low. You had a 1497, whoops, actually I think this is the high. We've gone beyond that one. Let's see, if we took this low to this high, yeah, that was 1501. We've gone beyond that as far as a symmetry projection. Let's see, we've got a 1771 rally, low high, project from the low, and then a 1638 and change rally, low to high, projected from the low. So you see where the markets have been stalling recently. Okay, this is the Dow. Let's see what we have as far as overlapping retracements. High to the low. Let's see, high to the low. Lower high to the low. Now again, I'm going to get rid of the lines that are not anywhere near current levels just because it just takes your focus away from what we're up against. And actually I want to focus more on the price relationships that come in underneath that January high. And this is what's important, what we're up against here. Look at some of these rallies in time also. You had an 8-week rally. You had a 17-week rally. You had a 4-week rally, a 7-week rally, and then currently into the last high was 6 weeks from the low. Okay, so we're very similar in time to this prior rally swing, okay, which was 7 weeks. So because of all of those things, that's why these were the times and the prices where we were looking for a possible failure. Will it definitely happen? No. I mean, if we're actually going to change trend and eventually clear that January low, it doesn't have to stall here. It doesn't have to reverse. Okay, we could be in process of a pattern shift. But right now, because we're still underneath this prior swing high on the weekly, we still have to watch for a possible failure. So we'll see. If the 15-minute charts start setting up on the sell side for me early next week, we're going to go for it. If it doesn't, we'll set up the flip side. We'll set up the buy side instead. As I left the day on Friday, the S&P was setting up the buy side still. So I'll give you an idea of what that looks like. Okay, there's a question about triggers. No, you don't. You start with the weekly information, and then you focus down to the daily, and then you focus down to 45, and then you focus down to a 15-minute. You don't, yeah, that's crazy. Anyway, in my free video section on the website, there should be a video that says welcome to the chat room. That will show you some trigger examples. The way that my partner triggers, Denise, you'd have to contact her for what she uses, because it's not the same thing. All right, this is a 15-minute chart of the S&P, and I think it's pretty obvious that it's a pattern of higher highs and higher lows. Okay, so this is what we were doing in Friday's session, setting up the pullback within the uptrend, using symmetry, using the retracements, or anything that just happened to show up. Let's see about an overlap. There are no real extensions in this example, because all you can see really are the symmetry projections of these prior declines, and I'll show you where they came from. So these are the corrective declines within the uptrend, and that's what you projected from the new high. Okay, so here, we held on a pullback, and the target for a move off of that low, if it plays out fully, is 872. So in this case, you only ran retracements and projections. Sometimes that's the case. You don't have to have an extension and a projection and a retracement to make a cluster. It could be 3 retracements, it could be 3 extensions to make a cluster. Okay, the question is why these points? to me, these are obvious corrective declines or swings in the same direction that should be compared. Okay, before I go back to the charts, what I want to do, I'm going to go grab my website. Where'd it go? And if you need Denise's email, you can email me and I'll send it to you if you're interested in the way that she works, because her and I started managing money together. I do all the analysis, and she does the entries and the money management. Okay, I'm going to give you an example of a trigger, or a trade setup and then a trigger. This is just under the, on the blog that's on the website. Okay, this is a symmetry setup where you can see the red lines that come in. This is on the S&P. It looks like something like 1311.85 to actually I can't even read the top number. All I know is, okay, actually 1313.75 it looks like on the top end. The pattern on this is on a 3-minute chart. The pattern on this chart is bullish. Okay, higher highs and higher lows. It held the support. So what do you do when it holds the support? You go to a triggered chart. This is an example of an 89 tick chart, and this has the TTM squeeze stuff on it. But in the trading plans that I have on the website, it tells you, one of the things that you need to see for a trigger is takes out a prior swing high, which it did over here. The bars turn blue to indicate the reversal, and that as far as the histogram, if you're not doing the exact rules for a TTM squeeze, I just want to see either flat or above for a buy, or flat or below 0 for a sell. So you held the support here, you took out the prior swing high, the bars turned blue, and the histogram was in the right place. You take a buy, where's your stop? Underneath the low. Okay, that's one example. There are tons of examples on the website. There are also, I don't know, probably 10 member webinars. There's also a way that I asked Dr. Clayberg to look at, how his mechanical stuff would be an entry against my work. So here's an example in the mini Dow, which I haven't done that contract in a while, but this was an example when we were doing a seminar together. Here was the zone, and I asked him to show me what he would use, and this is his mechanical system. That would have been, I guess, the first sale. And honestly, I can't explain his methodology or the way that he runs it, but at least there's something mechanical that you can use for entries. This is on a 233 tick chart. Let's see. So there are a ton of examples that you can go through, that I've documented on the actual website. Okay, let's see. Okay, best trade ever. I don't know what you're looking at, or what exact bar you mean and stuff. And this is just something that, again, you can learn by osmosis, by watching the highs and lows if you can't identify them. I mean, I'm just taking swings in the same direction that are obvious. They're obvious to me. They're not necessarily obvious to everybody else. I'm not going to focus on any other timing today. That I'll do in the chat room. So, if anybody is going to do a trial, I do timing pretty much every day on the end of day updates. Okay, another question is, am I using the TTM squeeze buy signals along with the fib lines? I'm not. There are people in the chat room that are. I mean, I'm running to work all day long. Denise is trading for me and other people, and there are some of the people in the room that are using that. Actually, I'm going to shut that one down. Okay, question is, do I use only the day session on ES, Dow, or overnight session too? I do both, okay, because the chart that includes the Globex data tends to be extremely sloppy, okay? So I usually try and run my 15-minute charts with only the day session data. But I will typically also run, a 60-minute or 240-minute I've been running lately, with the Globex data included in case there are any wild swings overnight that I want to be aware of and include in my projections. So sometimes I use both, and they can both be valid in their own way. Okay, let's see what else we have as far as... Okay, question is, how close do you consider the cluster lines to be valid to consider them as valid? 10 ticks? Not really. If you're using a, okay, let's see. Let's say in this example on the 15-minute chart, the low end of the zone is pretty much 856. If it went to 855 and a half, or even 855 and a quarter, within 3 ticks, then I think it's fine. But much beyond that, I usually throw it away and wait for the next setup. And you'll find that sometimes you overshoot these zones by a little bit, but not negate it. And the only time where I'd give it a little bit more room if it's something like a weekly chart or a daily chart. You just have to kind of look at the overall pattern, and you're not going to take a trade without a trigger anyway. You can't do timing on tick charts. The question is, why am I examples on time charts? First of all, the tick charts are too fast for me to keep up the analysis. I guess unless I'm doing some really big ones. The tick charts are mostly used for the triggers, the trigger entries, so you can fine-tune an entry and get in as close to the cluster zone as possible. And you can't do timing work on tick charts. Okay, let me see what else we have as far as questions. I know somebody was asking a question about using a pattern recognition software or something like that. I don't have the answer to that question, but I do, or I can tell you that I have worked with a few different programmers who have tried to program what I do, and they have given up. I was working with a money manager who was going to, try and do it, and we were going to, start a separate fund by, doing everything mechanically, and he said, forget about it. I couldn't do it. There is one program that's close to doing something similar, but I don't have any experience with it, so I can't comment on it. Okay, question is, does anyone else offer fib timing other than DT? Let's see. Many of the programs will give you timelines. Okay, this is, for example, timelines using 2 dates. A lot of the programs will give you that, like eSignal or TradeStation. But many of them will not allow you to do alternate time projections, which is coming from 3 points, where you would, let's see, like measure a high to a high and then run it the timing from an intervening low or something like that. I mean, you can't do it from 3 points on most other programs. Fibonacci Trader has some timelines, but it does not have the histograms. So the only one that I know of that has the histograms the way DT does it is DT. You do have, I think Advanced Get does have some histograms, but it doesn't allow you to manipulate the highs and lows used in the program. So you don't have a lot of flexibility with it. Okay, let's see. Okay, the question is, you've noticed that when a price bar closes above 38%, it will always move further and then retrace. You know what? I don't know about that statistic, but that doesn't really matter to me as much. What matters is, do I have a trade set up? Is it holding the trade setup zone? Is it giving me a trigger for an entry? And am I managing the trade? You know, because otherwise, if you get in a trade, just trail it and see what the market does. But as far as like looking at statistics like that, to me, it doesn't make sense, you know, as far as any sort of plan. I mean, you might want to look at it, you know, as far as a tendency, but what I want to know is, did my trade trigger? And am I moving up my stop? Do I have my targets? You know, do I have my exit orders? And what am I doing with, you know, the last contract? So that's something that I don't really focus on. I focus on the 3 setups that I run every day, which are the 2-step patterns, the symmetry setups, and the price cluster setups. I'm trying to think what else we have. Let's see, in these charts. Oh, we do have some time and price resistance coming up in the yen. Whether it triggers a sale or not is another story. Okay, I think I've taken snapshots of most of these. Okay, let's see. We've got about 15 minutes left at least. So I want to see if I can just answer a few more questions. And one of the questions is why I use bars over candles. Well, because sometimes with candlesticks I can't tell whether I'm hitting the exact high or low. So I don't, that's why I like using the bars. So I can see it more clearly. I mean, in the chat room I actually do have some of the higher time frame charts in candlesticks, but I'll switch back and forth when I have to do the analysis on it. It does snap to the high and the low in Dynamic Trader, but if I can't see it, I might go to the wrong low or the high. So that's why. Okay, one question is, when you have a buy or sell entry, do you average in for your contracts? Typically, I'm just looking at one of those, trigger examples that I showed you, where if it hits the zone and it triggers, you just do the trade. That's your entry. Now, Denise might do something different, but that's her. She might do something against a 15-minute zone and then add if it breaks down on the 3-minute chart. All right, I'll show you how you can do this pretty quickly. This is not hitting the exact low in the wheat, but the wheat's going up, so what do you want to know? You want to know when the move might terminate. Well, let's see. Now, if this last low is more important, okay, this should be the jump. No, this is the wrong chart. What happened to the ZW that I just made? That's the right chart. Okay, here we go. That was the crude. I don't know how that happened. All right, here, this is not really a really good chart to do analysis on at this point. The only thing I can see is running a retracement and an extension. And their symmetry is not going to come in until way above the market. So this is, I would say, the wheat's not setting up. Now, would it be setting up on a 15-minute chart? Possibly. You would just know that you want to watch the resistance at 552, 557. It's not clustering well. So what can you do with that? Nothing. Look for another market. But here is a chart of wheat on a 15-minute chart. And this does have good symmetry. You'll see that you can measure these prior swings. Let's see, this was a decline of 7 cents. This was a decline of 7 and, what is that, 3/4. This is a decline of 9 cents. And this high to low, this was 8 3/4. Okay, so you can analyze this chart because, you know, there are some clear patterns here. You take the prior swings, run the symmetry projections, run any of the retracements. The pattern is bullish on this particular chart. And in the short term, it targets 546. Okay, the question is, what is the most common error done by a newbie? Probably picking the wrong highs or lows, or on some programs, you have to, let's see, if you're retracing a high to a low, you have to hit the high first and then the low for the right, retracements. And if you click on the low first and then the high, it might come up backwards. You shouldn't have that problem with this program because, you know, you have two different keys, one for the highs to the lows, one's for the lows to the highs. But picking the wrong swings, there's some examples in the book on running the wrong highs and lows, like internal swings are not relevant to the current market. Okay, let me see. I've got one question up here. Where do you typically set stops after an entry below a swing low, or stops after an entry? Well, typically, you know, if you're entering on, let's see, on a tick chart, it's usually just above or below the higher low made prior to your reversal signal. So sometimes you're not risking more than 2.5 points on an S&P, maybe 3 maximum. Okay, question is, would the internal swings be relevant in a corrective move? I don't know how to answer that without looking at an actual chart. Okay, question is about TradeStation providing a single line erase tool. Well, I mentioned it to them, but I haven't had my meeting with them yet. and they said, do not promise anything. Let's see. Okay, here's a question. If there are no setups on the larger time frames, but there are setups on the smaller time frames, do you take the shorter time frame trades? Absolutely. If that's where the trade, shows up and you're okay with that, trading that time frame, absolutely. I mean, there are times where, I don't have anything on the S&P, but I have to set up trades for my chat room anyway. And then I'll just say, I don't have any major decisions on the daily chart, or we don't have any until such and such price. But meanwhile, here are the decisions within or on the lower time frame. Okay, there's another question. Does it matter if it's a range-bound market versus a trending market? I would prefer to set up a trending market, because you do have a pattern to work with that you're trying to just see if the current pattern is going to continue. If it's range-bound, it will still give you levels and cluster zones, from the extensions of the swings and the retracements and everything else. But those are tough to trade. That's when the market's kind of choppy. Okay, wait. Okay, I'm getting a question. Do you wait for the 15-minute bar to complete before you take the trade, especially when the price is making higher highs and higher lows? You know what? You don't have to wait for the bar to complete, because if you get into the zone and you're in that zone and the market is holding, you go to a tick chart, and the tick chart is either going to trigger or not. You don't have to wait for the 15-minute bar. It's just that the price relationships in the setup was created by a 15-minute chart. But no, you do not have to wait. Okay, I'm trying to figure out what you're talking about. Okay. Question, can you put your Fibonacci tool directly into your trade bar? You know what? I only started looking at TradeStation in the last few weeks. So that's a question for TradeStation. Okay, question is, which currency pairs correspond better with the criteria of your technique? Well, the only thing I can tell you is that I've done analysis on the euro, the yen. I don't do like yen to pound or something like that. I just don't. I have enough work to do in the other markets and not to mess with that. But I've done like the dollar to the pound and dollar to the euro and the yen. All of those have actually given some good setups, but you probably want to use something like a 60-minute chart or higher to set those up. I did do an article in that Forex magazine. I think most of it was on the euro. I'm not sure if that's might still have that article. It might be on my website somewhere in the download section. I've done work, or I'm only doing the euro futures at this point in the chat room. I just don't get the Forex data anymore. The only problem with that is you can't, I do not like the continuous charts. If I was doing more analysis on the Forex, I would want to use those charts, probably the daily and the weekly, so you don't have the rollover issues, because I don't think that that the work can be very accurate when you have some of these rollover issues, as far as the price work and or the time work. Let's see, the question is, do I explain how to work with DT? I think I'm showing examples more of, but I'm doing the work on Dynamic Trader. I'm not necessarily, going through the tools like I did today, but there's not too much that you need to do except just use these little keys here, run the retracements and the extensions, and then running the projections. As far as, how to use it, Bob has an extensive manual that comes with the program, and if anybody does get the program through my site, I work with them for an hour over HotCom. Okay, question is on the ES tick chart, what tick number do you use? Typically, again, I'm not doing it because I'm running the chat room. Denise is doing the trading. I don't think she's using tick charts. I think she's using volume charts and a couple of other things. But the most of the traders in the chat room, from what I gather, are using something like a 144 tick chart or 233 tick chart in the S&P. And that's for triggers, not for the analysis. Okay, question is, can DT use TradeStation data? Yes, it can. But there are some pros and cons about it. There's some sort of utility that you need to use to bring in the data. And I haven't used it because I don't want the extra step. I'm using the e-signal. But you can do it. I know that some people are doing it. If you're not worried about doing very short-term charts, then you can just use the TradeStation data. Okay, question was, on the ES trigger chart, it's typically 144 ticks. But, there's no, you can test your own tick charts or volume charts and just see what chart makes sense as far as, showing a shift in pattern where it would take out a prior swing high or swing low while it's still relatively close to a, 233 was the other one, where it's relatively close to the decision. You don't want to use a trigger that's going to get you into the trade when you've already traveled, 2/3 of the way towards your target. Oh, how do you access the charts? Okay, you can go to Twitter, and there's also a link on my site to it. But Twitter, and then follow, just look me up as search Fibonacci Queen on Twitter, and the charts will be there. But there's also probably charts for the last month are up there. Okay, question is, do I consider volume in my analysis? Personally, I don't. I honestly have so much work to do between analyzing like 25 different markets and different time frames and timing and everything else that I just focus on that. I do what I do best, and then I leave the other stuff to other people. Okay, well, I think we're pretty much done. If there are other questions, if you do a trial, you can always post the questions on the bulletin board, and then I can get to them there. There are times in the chat room where I can answer questions when it's slow, but there are other times where I just can't if the market's busy, because I need to update the work to get the setups out for everybody else. So in that case, it's better to post a question on the bulletin board. So what I hope that you do after I post these charts on Twitter is go back and try to recreate, one or more of the setups that, that I showed you today, like the, possibly the pound trade or the yen trade or the coffee trade, and see how you do and let me know how it goes. Thank you. I am done. I am toast. I'm ready to enjoy the rest of the weekend, and I hope you all do also.